Hey everybody, welcome back to the Commercial Real Estate Library Podcast. I'm Dayma and you know my co-host Garret McGillivray, and joining us today is the CEO of KingSett Capital, Rob Kumer.
Yeah, great to be here. Thank you for having me. And for those who are just watching or just listening, we were totally talking about, that's an amazing transition you just did from an off camera, off microphone conversation right into the show. That was like, it's like you flipped a coin and we just were on air.
I'm a completely different person.
That was an impressive transition. But anyway, I'm glad to be here. Thanks for having me.
Thanks for joining us. And before we started rolling, I was telling Rob that I forgot my jacket. My fiance convinced me not to wear the three-piece, so I took it off and left the jacket at home, which I thought was super bad. I was texting Garret about this on the way here because I watched you at the Mount Sinai
Humor me. Yes. Which I won.
Which you dominated.
Handily.
It was, I mean, the other guys did great. I don't think it was close though. And
Neither do I.
It was ridiculously, my favorite thing about it, it was ridiculously on brand.
Right.
I think like my favorite line of yours was you're talking about how nobody dresses up and you're like, remember when people used to dress up for the airport?
That's right. That's right. That was the cornerstone theme of the routine, was the inspiration behind that routine. And I know we want to talk about other things, but I like talking about myself. So the cornerstone theme of that routine was the airport. That was the inspiration. I was sitting in the airport, traveling for work, actually, flying to Montreal. I was sitting in Terminal 1 at Pearson. And I was dressed like this because I'm going for work.
Yeah.
And everyone around me is dressed terribly. I mean, it's so embarrassing, right? The crowd at the airport, the way they dress, what they're doing. Their guys are talking on their phones, on speakerphone without the, and guys are eating Kentucky Fried Chicken at 10:30 in the morning. I mean, the whole scene is so disgusting. And that was and that was the theme of and the inspiration for that routine. How we've basically just lost our minds and have absolutely no shame or pride of appearance anymore.
Just before we dive into the important stuff, could you share a little bit about the yes, I agree. The Dundas Square.
Yeah, well, the Dundas Square, there's let's not go into that. That was good for the stage.
Okay.
I think, let's keep it clean. Let's keep this clean. But I'm glad you enjoyed it. It was a lot of fun. It was a great fundraiser. Most importantly, we raised $2.5 million for the hospital, which was incredible. The lion's share, frankly, was raised by Adrian Rocca. I don't know if you've had Adrian on this podcast or not, but a fellow real estate investor. And from Fitzrovia, and he did an incredible job raising almost half the 2.3 million was from him. Yeah. And then the rest of us sort of filled in the rest. So that was an incredible evening for all of us.
He was also hilarious.
He was great. He was great. We were all great.
Fantastic.
Yeah. It was a lot of fun.
I hope that one day I get important enough.
You know what? I've told lots of people, and I'll tell you guys, if you get the opportunity to do it, and a lot of people, their knee-jerk reaction is, "Oh, it's not something I would ever do. That's crazy. I don't have the nerve to get up there and do that." My advice to everybody is, if you get the chance to do it, whether it's at that fundraiser or at a different kind of event, if you get the chance to do something like that, you got to do it. You got to push yourself to do it because it's a lot of fun. You'll never get another chance to do it. It's going to be completely out of your comfort zone. And it's just one of those things. It's a once in a lifetime opportunity.
I'm curious about how was the difference in the muscles? Cause obviously you're a great public speaker, CEO of a huge dominant company. So you're speaking all the time to your team, out at events and so on. How was it switching gears to do comedy?
Well, I mean, the specific act of speaking in front of the audience wasn't something that gave me much anxiety. I mean, as you point out, I do it a lot. It's never been something that's given me anxiety, even as a younger person. Speaking in front of crowds, it's just not my thing. I'm afraid of a lot of other things. That's not it. I know a lot of people have that as one of their biggest fears. For me, that's just never been the case. The difficult part of that exercise was writing the material. Right. And to put together 5 or 6 minutes of what I would call, C+ material Although, it was better than the others. The other guys had C- material. I had C+ material, but to put together 6 or 7 minutes of C+ material took me 4 months. So, you really, it's like anything else when you see professionals, right? Whether it's a professional athlete, a professional musician, a professional comedian, when you actually dive into their world and try to do it, you try to play golf and then you understand how good the professional golfers are, right? Try to play tennis, same thing. Try to, you try to play guitar and you realize how good a professional musician is.
Right.
Try to do comedy and then you realize how unbelievably extraordinary professional comedians are. So it was a very difficult to write that material. Took me, there were sleepless nights. I'd wake up in the middle of the night with a joke in my head and I would email it to myself. And then the next morning I would get to the office and I would, rejig my script. And over the course of literally 3 or 4 months, I put that material together. But that, and that after all that effort, that's what I got. I mean, it was, at best C+ material, but for that event, it was the best of the lot. So I was fortunate to come out the winner.
It was A+ material.
Okay,
I actually, because I watch a lot of stand up, I thought it was like one of the best things I've seen. So
that's very kind.
Let's dive into the nitty gritty. So just because this is topical, so Trump just got inaugurated, and an insane day of signing. What do they call it?
Executive orders.
Executive orders on stage in a stadium. That was incredible, and like good or bad, it was just a crazy thing to see. And in his speech, he talked about tariffs. He talks about Canada being the 51st province of Canada.
Right.
Very, very disrespectful to the Canadians. But Kevin O'Leary has been outspoken about, Canada joining as the 51st state and what it could mean in some version of this. Have you thought about that? Like, obviously it doesn't seem like a serious proposal on its face, but any thoughts about the 51st state of Canada?
No, I mean, I don't think it's a realistic outcome.
Yeah.
I don't think it's worth time thinking about it because I don't actually think it's a real proposal. I think, it's designed to, as many other things that the U.S., the now current U.S. administration is about. A lot of it is about causing anxiety and chaos and bluster.
Leverage.
And ultimately, leading to leverage, which then leads to, an outcome that they're looking for. The 51st state thing, I think, is a head fake. I think the tariff thing, will there be tariffs? Probably. Will they be 25%? Maybe on some things. Will it be forever? No. I think, my instinct is that it's about it's a means to an end and getting something that they want. There's lots of smart people around Donald Trump that for sure understand the economic impact, the negative economic consequences to their own population and their own economy by going down that route. Suffice it to say, it wouldn't be good for either side. And they're not in the business of making things difficult for their own people. That all said, I think there is a level of sacrifice they're prepared to make in order to get other things. I don't know what those things are. I've talked to lots of people over the last few weeks, people that would be way closer to these issues than I would. There's a variety of hypotheses. Some say that, the focus for the U.S. is all about border security and fentanyl and immigration and all those kinds of things. Some say it's about, a North American defense strategy. I've heard that theory that if you start looping in Canada, Greenland, Panama, etc., it really is starting to formulate a thesis around North American defense, particularly as it relates to the Arctic and the canal transportation and the shipping of goods through Panama. And our West Coast borders, our East Coast borders, and so on. So it's about, compelling Canada to do what, frankly, we should be doing anyway. I mean, and I've been pretty vocal about this over the years. I think us not committing to our 2% target, of GDP for NATO. I think Trudeau coming out and saying, not only are we not going to meet the 2%, we can't even tell you if we're ever going to get to 2%.
Right.
Like these kinds of this kind of abandonment of our obligations to the world or to at least the Western world, I think is an embarrassment for all of us. And frankly, I look at all this Trump white noise, and I say, if it is a catalyst for us to make some positive change within Canada, things like immigration reform, tax reform, interprovincial trade strategy,
it's a huge one.
Resource development, regulation reform. If the things that are going on in the U.S. right now and the threats that loom over us are a catalyst for us to fix our own house and get our own house in order, then that's a good thing. And I think there's an enormous opportunity in front of us to start doing those things. Now, we're in a bit of an air pocket because we don't have a standing prime minister. I mean, at the moment, but that'll change. That's a moment in time. That'll take a few months. I suspect that by June, if obviously no later than October, but I suspect by June we'll probably have a new government, and then we can get on our way and start fixing all the stuff we got to fix.
Yeah, I share your view too. I hope it is a wake-up call for Canadians and the government and everybody, how they're thinking about the interprovincial tax is absurd.
It's crazy.
It makes no sense. Like, apparently we 25% tariffs. We have higher tariffs interprovincially in some cases.
That's right. That's right.
And if we, exactly.
Our energy strategy is a north-south strategy. It's not an east-west strategy.
Yeah.
So we provide energy to the U.S. We don't provide energy to ourselves. Right. So, I mean, all these kinds of self-defeating strategies,
we can get rid of it
if we have the political willpower.
All of our food is from California and Mexico, but Manitoba, Saskatchewan are major producers of a lot of things.
Yeah. Can I ask something in terms of like a tactical question? So the tariffs may or may not happen in 10 days or so, and in some version of them. How are institutional operators like yourself preparing for some of this? You have a lot of industrial space occupied by great tenants. You have companies that kind of are thinking about this. Like, what are people doing to prepare?
It's a good question, and there's no real clean answer. And as I mentioned, I've been not speaking directly, but I've been at events where others have been speaking, and I've heard in the last couple of weeks, I've heard up close and personal. I've heard from very senior liberal politicians. I've heard from central bankers. I've heard from bank CEOs. I've spoken with heads of pension funds, and leaders of Canadian business over the last couple of weeks. And no one has a good answer. No one, I spoke with provincial politicians, very senior provincial politicians. No one really understands what the impact is or how this all unfolds. And you have to appreciate that when someone like Donald Trump comes out and says we're going to put 25% tariffs across the board, no one really understands how that even gets implemented. Ultimately, there's no clarity, right? I mean, these are shoot from the hip
tweets.
Yeah, look, these are shoot from the hip comments meant to cause anxiety. And no doubt about it, it's causing a lot of anxiety. But in terms of preparation, I don't think there's anything you can prepare. I think what you can do is start to think about, our political leaders and business leaders can start to think about all the amazing opportunities we have amongst ourselves. And how do we straighten ourselves out? And it comes back to, how do we get our resources out of the ground and access to the world, to the global market? How do we get the provinces supplying each other with resources and energy and product, between themselves without their own tariffs? How do we get rid of all the regulations so that we can build buildings and build highways and build subways? And how do we restructure our tax code so that it encourages investors and business builders and business leaders to invest in their businesses and keep the money and the capital in Canada and build businesses here and employ people? And how do we do all of those things right? And that's how you prepare. That's how you prepare. Ultimately, you have to remove yourself, or you have to remove the dependence on what we can lie down and play victim and talk about how the U.S. is victimized, has a stranglehold on us, or we can get our world in order and control our own destiny. And so we have that choice. So the next 6 months, nothing's going to happen because we have no politics. We have no political leadership. But once the political leadership lands, we'll have a choice to make. And I'm also encouraged on that front by the fact that when we get an election, we'll have Poilievre on one side, leading the Conservatives. My gut tells me we'll probably have Carney on the other side. He's come out of the gate pretty hot. He's looking like he's, going to at least be a very strong contender. So let's assume for the moment that it's a Poilievre-Carney race come June. I'm encouraged by that because you have two adults that are both skilled, I think both smart, different policy. So you'll have a choice to make, but at least we'll have two good choices.
Yeah.
And that for me, that's the first time in a long time that we've had two good choices. And it might, some could argue it's the first time in a long time we've had at least one good choice.
Yeah.
Okay. So we'll have, I'm optimistic we'll have two good choices. And everyone will make their choice and then we'll have to live with it. But to me, that's very encouraging as well. So I do believe that once the political leadership lands, whoever it is, if it's one of those two people, we can get ourselves on the right track.
Yeah.
So that all feels pretty good to me.
It feels pretty good. And again, if there's anything, tariff-wise, the 51st state conversation, it was kind of, it gave me optimism to see the news anchors talking about, well, Canada's the 51st state. And the guys on Fox News would be like, well, we'd have more resources than anybody. We'd have biggest landmass. We'd have like X, Y, and Z, and we'd always win the Winter Olympics. But you kind of look at that and you're like, okay, we could just do that. So
we could just do that.
Yeah.
And those in the know at least have led me to believe that this is more about North American security.
Yeah.
And independence than it is about tariffs and fentanyl.
Yeah.
Yeah.
Okay. Shifting gears back to
now you know everything I know about politics. That's about it. We've exhausted my political my political knowledge.
Good. We'll shift gears. So KingSet is prolific. You guys are, the standard for private equity, for lending, and every different department. You guys are superstars, and
thank you.
I love to see it.
Thank you.
And so, but you guys are in all these different verticals, every asset class on both sides of the equation, oftentimes. Maybe we can just walk through each asset class and just talk a little bit about what you're seeing, where the opportunities lie, and maybe some of the risks. Like, I think starting with office, you posted something on your LinkedIn a few weeks ago about the resurgence of office, coming back to life after that COVID experience. Mm-hmm. Like, how are you thinking about office these days? And what's the path forward for the next few years?
Yeah. So first of all, very kind words about KingSet. KingSet was started back in 2002 by John, our founder, John Love, who you guys know. And John's an amazing guy, and he's imparted a lot of that amazingness to the rest of us. And we're doing our best to carry on that legacy that he created and that he continues to, be a big part of. We come to work every day. We work hard. We have a very strong core set of values that we walk the walk, not just talk the talk. And I think that's driven us to be, really a terrific organization, certainly to be a part of. I've enjoyed it. We've got terrific people. We've got amazing stakeholders. And we've built a good business, and our job now is just to carry that on and make sure we don't mess it all up. And so we're trying very hard every day, fighting for that. And it's easy, particularly when people say great things about you. It's easy to get complacent, right? And hubris is the enemy of success, right? So you find a little bit of success, and then you start to think you're really great, and then that success can quickly fade away. So our job is to never really take on that hubris. So despite all the terrific things you just said, which I appreciate, we don't really think of ourselves that way. We think of ourselves as really actually, a really hardworking group of people that come to the office every day, ready to go to battle. And every day we have to earn the trust of our stakeholders, our investors, our tenants and customers, our service providers, and so on. And so we're working hard every day to get that done. And I'm very, very proud of what the team accomplishes every day and the opportunity to, or being given the opportunity to lead that group of people. is something that is well beyond what I ever thought I'd be doing. So I'm very proud of that. But anyway, thank you for all the very nice things you said.
Literally every person that I've ever met from KingSet, you go, yes, they belong at KingSet.
Thank you. Thank you. That's good. That's
Michael
very
Lee,
encouraging.
Abiel.
Yeah, terrific people. I mean, we've put, and Dan's new to the shop, but look, we've put together, I think we've put together a great group of people. And, part of that is I think KingSet it attracts good people. We pick good people. People, once they're inside the door, I think feel not the pressure necessarily, but it's contagious, right? Like the work ethic, the entrepreneurial mindset, the energy, the values, that's all very contagious. And you'll see it here at Colliers too, right? Like you've got great people here. You've got an amazing brand. You've got a phenomenal leader in Jay. And so like you'll recognize some of those same kind of things. So thank you. It's great to hear all that stuff, and we're very proud of that. And I just hope we can keep building on that success. Okay, back to your question, office. So look, our view of office has always been and continues to be really all the way through the pandemic and since then, is that good office product will continue to thrive. Tougher office product will have challenges, and I don't think those challenges are going to be short-lived. I think those challenges are going to be around for a while. And we own both. We own good stuff and we own bad stuff. The bad stuff we're struggling with. And in some cases we're rezoning the land, and our plan is to scrape the building. And, when the residential market comes back, and we can talk about that too, we'll do some residential. Some of it's conversion. And we actually do have one or two legitimate conversion opportunities that I think will actually get done. It's not easy to do, but we think we've got some contenders for that. And then we've got some buildings that are really challenged, and we don't have a great exit plan, and we're working on it. And we need some things to go right, and we're optimistic we can make it done. And then there'll be some contenders that we're just going to cut bait, and we'll be a price taker. Someone will buy it for something. I mean, if you got $1, would you take it? No, but if you got $10, you might. I mean, there's a bid ask out there for everything, right? That's what makes the market. So that's the tough stuff. And then there's the good stuff. And the good stuff, the 700 universities of the world, 2 Bloor West, Scotia Plaza, Arthur Erickson Place in Vancouver. We have a number of office buildings across the country that are great buildings, and they're full, and there's lots of demand from tenants. Rents are growing. We're investing heavily in the buildings between zero carbon and amenity improvement and technology and all those kinds of things. We're making the tenant experience really compelling, and there's lots of demand for that space. And our view is that will continue to, those buildings will continue to outperform because they offer the opportunity for tenants to build businesses. And our view is that businesses will want to be in offices. They might not be there 5 days a week. Look, you roll the clock back 40 years, guys were in the office 6 to 6.5 days a week.
Yeah.
When I started in the late 90s, we were there 5.5 days a week. Okay. Then it, over time, now we're sort of there 4.5 days a week. We're still working the other half day, but everyone's there sort of 4.5 days a week. Some businesses are there 3.5, 4 days a week. Like, our view is that the cornerstone of being in an office and building a business in person live will largely dominate. Not for everybody. There are, of course, businesses that have migrated to remote setups and have been very successful in that. And those businesses will continue to be remote. But those aren't the tenants we cater to. We cater in the big office buildings downtown. We cater to institutional tenants largely, and tenants that will always make physical office space an important part of their business strategy.
Yeah. I will say a PSA to anybody young listening. You need to be in the office. Mm-hmm. It's like, I mean, when I got started at Colliers, I started at 1 Queen East, as I mentioned. Mm-hmm. I started on Barnaky and Chandler's team back in the day. Mm-hmm. And I was like a heat seeker for the best in class people. It was like my favorite thing. If I could just get 15 minutes with them, as I mentioned, you were nice enough to give me 15 minutes in the old KingSet office as well.
Right.
But you're just trying to be helpful, just trying to gather information. And that's how you learn and grow.
Yeah.
If you're not in the room, how are you going to get selected to do anything and build a relationship?
I have that same perspective. Not everyone shares that view. Look, I was talking to a young person a couple of weeks ago who lives out east, and he would be probably in his late 20s, and he works remotely. He's in Halifax. He works remotely. His teams are scattered all over the U.S. He might even be the only person in Canada. I'm not sure, but principally the people he's dealing with on a day-to-day basis are in the U.S. in different markets. He might get together with the team once a year, maybe for a holiday lunch or celebration or something like that. And otherwise, it's a completely remote setup. He loves it.
Yeah.
Has no desire to come back to Toronto. Has no desire to be in the office. Feels like he's got a good job. He's, happy with where he's at now. I would probably, as I responded to him, my perspective is that if you want a job, that works.
Yes.
If you want to build a career, and ultimately, particularly in the business you're in, if you want to build your own mini business, like your own business within the, you're building your own team, your own business within the Colliers flag.
Yeah.
If you want to build a business, you want to build a career, you want to build relationships, you sort of have to be in the office. And I don't really think there's a substitute for that.
Yeah, I wholeheartedly agree. And I would say that, to the guy who moves to Halifax, for instance, part of that might just be cost of living in big cities. And so switching gears to talk about multifamily, both on the development side and the existing side, how are you guys thinking about this crazy market that we have with the numbers just not penciling out? I'm getting a lot of calls from condo guys saying, okay, I want to convert to multifamily. Or, in some cases, I am worried that my buyers are not going to close. Like looking at if they qualify today versus 2020, it just might not work. So like, where do you see opportunities in that? Like, how do you see that whole thing shaking out over the next couple of years?
I think there's a lot. Again, it's
multifamily, not the same as development, obviously, but
let's loop it all in. Let's just what we're really talking about is how the residential market evolves from where we are today, which is effectively we have a non-existent residential for sale residential market, whether it's low rise or high rise. Nothing's getting launched, nothing's getting built, and that's an issue. Now, it was a bigger issue when population growth was on steroids. Today, population growth, and certainly for the next couple of years, my expectation is, at least based on what our politicians are saying, is that immigration and population growth is going to slow dramatically.
Right.
So I think that does change the calculus a little bit. But we are underserved. We are undersupplied currently. There is lots of supply coming that is either arrived over the last 6 months or will arrive over the next 18 to 24 months. We're going to have to get through that period of time, and that supply is going to have to get mopped up, and that's going to take some time.
Yeah.
And until that happens, I suspect you're not going to see a very strong rebound, particularly in the high-rise residential market for sale. As these units come on stream, and a lot of them are being rented, not lived in by users or owners, but by renters. You're going to see some moderation in the rental market, and we're already seeing that. I mean, we're already seeing market rents for the new stuff come down a little bit. Condo rents are down a little bit. Market rents for the older product, at least in our own portfolio, growth is slowing. They're still growing, but they're slowing. So, if you take an old, what I'd call a vintage residential building, and you got a person in there who's paying $1,600 a month, market rent, if that person were to leave and come back and you do paint and carpet, whatever, that unit would go for, I'm making these numbers up, but $2,300 a month. Next year it might be $2,350 a month, not $2,450 a month. Right. So those rents are growing, but at a much slower pace. The condo supply, the brand new condo supply, or even to some extent the rental, the purpose-built rental product that's being built and delivered, those rents are actually modestly, but they're falling. So whereas you might have penciled out by the time a building gets out of the ground and open for business, whereas you might have penciled for a one-bedroom unit, it was $2,800 a month or $3,200 a month. those rents are actually in some cases not hitting those marks, and they're actually lower than people thought. So that's there's a little bit of a dichotomy. There's a little bit of divergence between how the old vintage buildings are doing versus the new buildings.
Yeah.
And I think we're going to continue to muddle along a little bit in residential until the supply is mopped up, and that's going to take a little bit of time. You talk to condo brokers, which I have, and like the unit brokers, residential agents, and they'll tell you that today, they can find you units in buildings that are standing. So standing inventory that has never been lived in, that either inventory that the landlord still hasn't sold, or inventory that has been purchased by somebody who's now either trying to assign the deal or flipping the unit. And in buildings that were achieving $1,600, $1,700 a foot, 24 months ago, they can find you units for $1,000 a foot, like huge discounts.
Have you heard of people in the market creating funds just to go after that specifically?
Yeah, funds might be a too strong a word, but for sure there are people, at least private investors that I've heard, that were putting what I would call pools of capital together to go and try to buy inventory at scale at a discount and then rent them out. I don't have clarity really as to how those are performing. I think it's an interesting business model. I think for us, it's tough to scale that to a point where it makes sense for us to do. But I think it could be an opportunity. It could be an opportunity. I think you have to be careful. When you're buying the condos, to me, there's good condos and bad condos. We sort of talk about condos like all in one, as though they're a monolithic, asset class. And I think there's good condos and bad condos. I think there's buildings that will age well. There's buildings that will age very, very poorly. There are units that work. There are units that are pretty funky, right? Like you walk into some units and there's columns in the weird places, or the bedrooms over here and the washrooms over there. And when it's one thing to sell a unit off of a plan and then rent it to someone who's going to live there for 6 months or 8 months or a year,
or not live there at all,
or not live there at all. But it's a different thing to have a standing unit existing that someone can walk through and think to themselves, "Can I live here? Like, is this? Can I live here like permanently?"
It feels small.
It feels small, or how, like if I have a friend waiting for me in the living room while I'm getting ready, like how do I get from the washroom back to my bedroom? Like, it's little things like that, right? Yeah. That on plans, when the investor's either not in the city that the building's in, could not even be in the country that the building's in, and they're looking at it online or on a schematic, you sort of say like, I don't know how close attention they pay to those details. It's different when the standing unit is right in front of you and you're able to walk through it and live it and breathe it for a few moments before you make the decision whether to buy it or rent it or not.
Have you heard of, somebody mentioned this idea to me the other day. Have you heard of groups doing kind of like preferred equity infusions, so that somebody who was a condo builder and now they're not following through with their pre-sales, just to give them that equity bump so they can leverage the rest of it? And then like maybe they have a preferred equity option to buy the completed building back from the builder at like a 5% discount.
I haven't really heard much of that. I mean, we have a relatively sizable mortgage book out, construction mortgage book out to a series of condo developers, and some have gone well, some have gone less well. The ones that have gone less well, we generally have an exit strategy for, and we're executing on that. What we have not seen yet, despite your assertion at the onset of the question, we have not seen large amounts of buyers walking away. I mean, that's not something we have seen really anywhere. I mean, there's been a project here or there where some buyers have fallen away, but by and large, across the board, the buyers are closing, and the ones that don't qualify, so to speak, are figuring out how to get it done.
Right.
Or they're flipping the paper, at a discount, and the new buyers figuring out how to get it done. So, we have not seen that yet. There are some cases where developers have failed. Yeah. That's probably more common. The most common default in our mortgage book of all the problem loans that we have in our mortgage book, and there's not that many, there's a handful, but there's not that many. But of all of them, the most common scenario is a residential developer who's long land, short balance sheet, and cash. And projects have projects have taken longer to either get out of the ground or to get zoned or to get the pre-sales done. Like, things have just dragged. The interest rate spike, in the last 24 months wasn't helpful. So they've basically burned through their interest accrual facility in 6 months when they thought it was going to take them 24 months. And there you are basically with a massive cost overrun. So you have to either fund it with equity, and a lot of these guys don't have the cash to do that. And so we find ourselves in a position where we have to, either work with the developer to get it built, or we have to basically take the project back ourselves. We hand it to our development team, and in a few cases, we're actually building the buildings ourselves, and we become the de facto developer.
Yeah. Is there anywhere, Rob, where you're hyper bullish might be too strong, but like very optimistic or opportunistic? KingSet as a private equity group, or all sorts of names, asset manager, institutional steward, you name it. But when there's challenges and headwinds, I feel like this is when the KingSets, the Blackstones, the Brookfields, all these guys really capitalize. Is there anything that you're super excited about right now?
Yeah. First of all, I don't put ourselves in the same category as Blackstone and Brookfield, but that's a discussion for a different time. I mean, those guys are global investors and have a scale and that doesn't compare to what we're doing. But insofar as the Canadian market is concerned, in my 25 years of investing in real estate, there have been basically, I'd say, 2 times where you can focus on what I call spread investing. Okay. Spread investing is when you can buy an income producing building at a cap rate that's 100 to 200 basis points higher than your cost of debt, finance it, not grow income, maybe grow income like with inflation, but like, let's just call it not create any real value, sell the building for what you paid for it, and make opportunity fund returns. Okay. The first time was in 2004 or 5, in sort of the lead up to what ended up being the global financial crisis, but 4, 5, 6, like in that. And now, okay, it hasn't happened since the global financial crisis. So we're finally in an environment, because with the collapse of interest rates coming out of the global financial crisis, all that whole spread investing thesis went away because cap rates collapsed.
Right.
So today, as the cost of debt has shifted, even though it's come down from where it was, but there's been a quantum shift in the cost of debt from where it was in 2022 to where it is today. The cost of equity has shifted. Sentiment around real estate has shifted. Capital flows, so particularly the attractiveness of Canada amongst the Canadian institutions, has shifted. Most Canadian institutions are overweight real estate, overweight Canada. Capital has left Canada, left real estate, and gone elsewhere. So cap rates have all moved. So when you ask me am I optimistic, I am super optimistic, because we find ourselves in a market that you can generate opportunity fund returns by taking core and core plus risk. That's the holy grail. That's literally the holy grail, because you can get 2 times return for 1 time for 1 time's risk. There's no better time to invest. And so, and it all comes back to, and this is all predicated on the assumption that you have access to capital. Okay. That's the tricky part.
Right.
You have to have access to capital. But if you have access to capital, this is the time to buy. Right now, because you can buy a 7 cap office building and finance it at 5 and just sit and have your tenants pay you rent.
It's such a beautiful thing. We've talked about this story, but in California, and they repealed that law where you could steal like up to $900 worth of stuff. And then there were viral videos of people stealing, and then they get arrested.
Right.
And they're like, what do you mean? It was just like $850. Right. Crime is now illegal again.
Right.
And so in Canada, it's like real estate now has to be cash flow positive. Yeah. Real estate actually makes money.
Right. Think of over the last, it's 2025. So think of over the last 15 years, basically since the global financial crisis, think of all of the risk we were taking on over those years, right? Guys were out, us included. So I'm not saying that like we're smarter than anybody, but everyone, all real estate investors were out. We were buying land, we were zoning it, we were building buildings. Some guys are doing stuff on spec. Other guys, you pre-lease half a building, you think you hit a home run, so you build the whole building. It doesn't, you have to remind yourself that it's half empty,
right.
When you build it. But think of all of the risk we were taking for years and years and years. And today, you don't have to take any of it. You can go buy an apartment building. You can buy a shopping mall. You can buy an industrial building. You can buy an office building. Now, you have to be you have to have access to capital. That's part of the trick. You have to fundamentally believe that you can maintain the income.
Right.
So that's where office, the best opportunity is in an office because there's so much pessimism about the operating fundamentals of office. And it's not unlike condos been painted again with a monolithic brush. So everyone thinks, well, all office buildings are bad. So, when you have that prevailing attitude that you can't maintain income in an office building, it provides a huge opportunity for those that do fundamentally believe they can maintain the income in an office building. Because if you fundamentally believe you can keep a building leased, and you can buy it at a 7 cap and finance at 5. Like there's no better opportunity than that. I don't think.
Yeah.
At least not in the 25 years that I've been doing this.
Well, and it goes back to that old adage of, when there's blood in the streets, buy land, right?
Yeah.
Like, look for opportunities.
There's lots of sayings, right? The Warren Buffett, be fearful when others are greedy, greedy when others are fearful. I mean, and you see this in the private market. I mean, you'd probably see this in the multi-res space. The private investors have sort of figured this out, but this is classic. It can be symptomatic of the institutional world, right? Where they invest in themes, so institutional investors will typically make large, broad strategic calls as they sort of have to, because they're managing, huge pools of capital. And so they're getting in things and getting out of things in entirety, right? And that's where they look to groups like KingSet or Blackstone or Brookfield or the rest of us. They look to other asset managers who can help them navigate some of those waters. And so an institution would have, a $20 billion real estate portfolio. They'd allocate a small slice of capital to groups like us and say, okay, now take that small slice of capital and outperform.
Right.
And so we look for things like spread investing. And to me, spread investing is the best opportunity of all. So if you ask me if I'm optimistic, I'm super optimistic today.
Yeah.
But you need the capital and you need the fundamental belief and the operating platform to figure out how to maintain income and, God forbid, grow income.
Yes. And speaking about prevailing trends and institutional guys picking an avenue, one of the big ones has been data centers, this AI revolution. So maybe this is a good opportunity to touch on industrial and, the outlook for that asset class. How are you guys thinking about industrial? And even if you look across Canada, are there certain provinces that are much better opportunities? Is it anywhere that's kind of near a big city? How do you think about industrial?
So we view industrial a little differently than a lot of other groups view industrial. Our perspective on industrial real estate is that it's fairly transitional. So what is core real estate? What is core industrial today? A decade from now probably isn't core real estate. So things change in industrial, whether it's the clear height, the door to floor ratio, power requirements, all those kinds of physical attributes about the building are very transitional. They ebb and they flow and they change over time. So we aren't heavily now data centers is different. I view data centers as a completely separate asset class. It's not something that we spend a lot of time on. I think it's got I'm sure it has lots of great opportunities, and there are reasons why groups are spending a lot of time there. It's outside, frankly, of our skill set. And I look at it that's more like a technology play than a real estate play. The real estate box itself is fairly straightforward, but it's all the equipment that goes on inside and understanding what has to go inside, what makes one location better than another location, and more importantly, how quickly all the infrastructure inside depreciates. Understanding all of that is a skill set that we aren't really armed very well to understand. So we don't spend a lot of time in data centers, but traditional industrial real estate, our bias has always been towards small bay, multi-tenant, the stuff that you can buy for well below replacement cost, or could, over the last few years could buy for well below replacement cost. Today you can't because the rents have sort of caught up to it. But things that are just not being built anymore. Because I think fundamentally that's a good place to at least start, right? Start where supply is stifled. And the reason why supply is stifled there is because it's too expensive to build, and the tenants that use it require locations that are typically inside urban boundaries, and there's not a lot of land inside. It's certainly not cheap enough to buy to build this stuff. So you're buying product that's so far below replacement cost, it's sort of irreplaceable. The other part of the industrial world, or the distribution, is sort of, and I'm making a crude sort of bifurcation in the market. I know there's more nuance in this, but just for the moment, the other side of that coin is the large bay, what I'd call bomber warehouse distribution buildings, and that's a market unto itself. I think you need tenant relationships to really be successful there, and you need access to land. You sort of need a land bank, right? Because to buy, a 400,000 foot or 1 million square foot warehouse leased to Amazon for 20 years, single tenant building, with growth built into it, and you pay a 4.5 cap because the Amazon credit is so good. I'm not sure how you make money there, to be totally honest. Right. I think you can check a box by saying we now own core industrial, and we have a weighting to core industrial in the GTA, and this building is in Milton, and it's like, and the guy's paying $24 a foot, and it's Amazon, and they'll be there for 20 years, and then they've got renewal rights. I'm still not perfectly clear on how you make money in those kinds of deals. You can get a running yield, I suppose, of some kind, but I'm not sure how you outperform. So it's not really a market we've spent a lot of time in. And the other part of that is, 15-year, if it's a 15-year lease, or often I guess it's probably a 10-year lease or a 15-year lease, 15 years goes by pretty quick, and I'm not sure how that negotiation goes at the end. Okay, so you're there, you got 1 million square feet leased to Amazon, and they're up in 2 years. Now so you stare Amazon down. And by the way, you're in Milton, so there's another piece of land, there's another farm, not too far away, where a guy's just sitting there, like twiddling his thumbs, waiting for the Amazon lease, because he's got his farm and he's zoned, and he can build the building in 6 months, right? These are boxes that are not very complicated to build. So there doesn't seem to be any limit on supply, or any real limit on supply. And the fundamental physical characteristics required by the tenant in those kinds of buildings changes over time. So what feels like a great building today might not feel like a great building 15 years from now.
Right.
And you're held hostage to whatever that tenant wants to do, because God forbid you're slapped back with 1 million square feet to lease. Now what do you do?
Yeah.
That's a very difficult set of facts.
That would be scary. And you have to hope that the trends are the exact same as today.
Sort of.
People need warehousing. There's the same thing going on with distribution centers.
Now, all that, and there's growth. But now, all that said, people have made a lot of money in industrial over the last 15 years. So we've been wrong. Okay, just for total clarity, we've been fundamentally incorrect we missed that boat 10, 15 years ago. Okay, a lot of groups have made a lot of money in industrial. We didn't see it coming, and we missed that boat. I'm still not unhappy with the bet that we made, because I think on a risk-weighted basis, I think the low probability outcome is what unfolded, not the high probability outcome. And that is, there was an extraordinary run-up in demand for space. We couldn't build it fast enough. And there's been a fundamental shift in the way people do business and the way the economy runs and the way inventory is stored and shipped and distributed. So there was like sort of a perfect storm in industrial. We didn't see it coming. So we missed that. But to say it's going to happen again, low probability, in my view, low probability bet, and it's not high on our radar screen.
Interesting. This is, I have heard.
We bought the small bay stuff.
Yeah.
And the high probability outcome unfolded.
Right.
We made money on it. It's tougher to scale, right? It's because you're buying fundamentally smaller assets. But we at least saw the high probability outcome and the high returns, which for me on a risk-weighted basis is a way better bet.
Right. How do you think about, like, we talked about opportunity a little bit here. What's the next big idea, if you're able to share, in terms of, like, well, I think about, what you have access to and, all the smart people. There must be guys pitching you all the time. Hey, we need to raise this fund, or, like, I don't know. There's some unique strategy. Maybe I can frame it like this. Like, in 2025, aside from cash flowing assets and generating that spread, what are you most excited for KingSet?
I'm most excited for all of the potential that I think Canada can unleash. And it extends beyond real estate. I feel like I look back on the last sort of what I'll call a lost decade for ourselves. And we've been fairly resilient. Canada has been a great place to live. It's been a great place to raise a family. It's been a good place to do business. We've all found some success. And I've been quoted many times saying, I think this is the best place in the world to live and raise a family and build and help build a business. But we've done it in the face of so much, I feel like our political leadership has done everything they possibly can to stifle that growth. And despite all that effort, we still came out in pretty good shape.
Yeah.
So now I'm excited because I feel like we'll see a change in political leadership. In fact, I know we'll see a change in political leadership. It might be a liberal. I mean, it's unlikely, but at least give it the dignity of a possibility that we're going to see a change in political leadership, regardless of the party. And I think we have competent candidates. So I think a whole bunch of course correction I think we're about to undergo a whole bunch of course correction. And for me, that's the most exciting part, because if we can figure out all the amazing things we're capable of, and if we can take advantage of it and for lack of a better word, exploit all of the advantages we have over the rest of the world, despite our small population size, I think we can be a real impact player. And if we're here in the middle of this amazing city, in the middle of this amazing country, doing amazing things, then I think the opportunities here are sort of endless. And it could be real estate, it could be equity, it could be credit, maybe it's development, I don't know. But as the rest of the business world grows, and we need a pro-growth agenda, and I think it's coming.
Yes.
And I think that's coming. So maybe just to synthesize all that, what I'm most excited for is a pro-growth agenda, because I think if we get a pro-growth agenda at large, the real estate business will be on steroids. And so that, to me, is what gives me the most optimism, the most excitement. We have to get our capital to coalesce around some big ideas, but all of that's going to come together. And I think we're going to be in a bit of an air pocket for the first half of 2025, given all the other stuff that's going on.
Yep.
But I'm pretty optimistic that the back half of 25 and then leading into perhaps 26 and then beyond, I think there is no country that's better positioned than us to take advantage of all of the great stuff we've got going on here.
Yeah. I'm fired up. I am very excited.
Job well done then.
Yeah. I like, it's easy. You can definitely envision a future where, I'll have, like, in today, you have my high school buddy saying, well, I'll never buy a house. I'll never, the job market, yada, yada. And so, you can flip that on its head and we can just be supercharged. And what we've seen disappear over the last 10 years, and frankly, you've seen it in the US as well, is the middle class, right? I mean, we have massive income disparity. Yes.
The rich have gotten richer, and many of us have been the beneficiary of that. The poor are further behind, particularly as asset values have grown. I think that social media hasn't done anyone any favors, because in today's environment, the poor see the rich enjoying being rich more than they've ever seen them before.
Yeah.
So there's more desperation. There's more, what's the word? Not envy, but for sure there's FOMO. For sure there's FOMO. But there's more indignation, about what they don't, what people who don't have, don't have. And I think it's created a lot of animosity, a lot of anger, a lot of despair, a lot of desperation, a lot of I'll just never be, a lot of hopelessness. And I think that's really unfortunate. We have to bring that back. But to bring that back, we have to take advantage of what we have, right? Yeah. And I'm hopeful, I'm optimistic, and I'm actually, I would say I'm confident that that a new political leadership will start steering us in the right direction. And frankly, when you peel back all the layers of Donald Trump, love him or hate him, love his style or hate his style, that's sort of his message.
Yes. That
all the people they thought were forgotten and all the people that felt they were being ignored are no longer going to be ignored. Now, Donald Trump may or may not address that. This is not a statement on that, but at least he's talking to those people. That's how he got elected, right?
They have hope.
They have hope. They have hope. They think he's the savior, and maybe he is the savior. I don't know, but ultimately we have to address that problem. It's the income and resource inequality here that's causing all of the animosity, between the haves and the have-nots. We've lost the middle class, and that's a very important, part of what we need to create and bring back, moving forward. And I think, again, I think Poilievre and Carney are both equipped to do that.
Yeah, go Poilievre. But
well, it's even exciting on Carney's side, just because he is a real estate guy. So,
not really a real estate guy.
He's more into real estate than others, being on top of Brookfield and having Bank of Canada, Bank of UK experience.
Yeah,
he is more knowledgeable than a school teacher.
Yes, 100%.
That's what Rob was saying. It's two smart choices.
Yeah, it's two smart choices. He's not a real estate guy. I mean, I think he's obviously an economic guy, and he would understand better than I would understand the underpinnings and the underpinning fundamentals of the real estate market as well as anybody.
Yeah.
I don't think he has real estate operational expertise, but all that said, I think, look, he's super smart. There's no question about it. He spoke at the Ivy Business School. He was awarded with the Ivy Business School Business Leader of the Year award back in October, and I go to that dinner every year as an alumni, and so he was obviously giving his keynote address as a recipient of the award, and I went into it really not wanting to like him. Okay, admittedly, I'm. My stripes are blue. Okay. So that whether that's clear or not, but yes, I'm by nature a conservative voter.
Yes. As is almost every real estate.
But I'm trying to be balanced in this particular discussion. But anyway, I went into that event not expecting not to like him, and I came out liking him. He made a great speech, said some great things, has some good ideas. He's engaging, and he's likable. He's likable. Now, I say that as part of the quote unquote elite, right? I mean, the criticism that will come out against him, I'm sort of speculating. This is my own speculation, but I think the criticism against him will largely be that he's part of the elite. Right. And in today's world, that's a real knock against you, right? Because there's so much skepticism, so much, there's so much, people just don't like the elitism.
Yeah, I think I saw something where he was trying to brand himself as an outsider, right. And then I don't know if this is Twitter nonsense or something or not, but he is literally the signatory on the $20 bill. It's something.
Is that right?
He's very much what does that mean? Yeah. But
I feel like the idea is just an outsider to Trudeau.
Yeah, he's trying to distance himself from Trudeau, and I think that's where he has an advantage over Freeland. Not a big advantage because he's still pretty close to Trudeau. Freeland's very close to Trudeau, and I think that's going to be a huge thing for her to try to overcome. That's going to be a difficult thing for her to figure out how to craft that narrative. He is also close to Trudeau. He's less close. If you had to pick one of the two to be less close, he's less close.
Although he is the godfather to Christopher Freeland's kids.
Is he?
Yes.
I didn't know that.
So they're all connected.
Okay, I didn't know that part. Yeah. But I think his difficulty, his challenge, his biggest challenge is going to be he comes off as being an elitist, right? He's all the things that elitists are. He's well educated. He's successful. He's lived all over the world. He's I'm assuming wealthy. I don't know, but I assume he's like relatively wealthy. You know, he speaks like an elitist. He articulates like an elitist. So those are going to be his challenges. Can he be relatable enough in today's shift towards populism, in the way that Pierre Poilievre is trying to be, or appears to be at least, to be attractive to the masses? And there's just such a huge rejection of the intelligentsia in today's society, right?
Yeah.
That everyone's moving away from that. They did it in the US, they've done it in Europe. I mean, they're doing it all over the world. And there was a shift towards intelligentsia 10 years ago. And over the last 2 years, there's been a shift away from the intelligentsia. And that's why the whole world's moving right.
Yeah.
And we saw it in the US. My sense is we're going to see it here in Canada. In any event, we're going to move right. Whether it's Carney or Poilievre, they're both right of where Trudeau is, although Carney much less so.
Yeah. Is there anything, we have a lot of real estate brokers, we have investors, we have all sorts of, our audience is broad, real estate stakeholders. Mm-hmm. Is there anything they should be paying close attention to? Anything you want to direct their eyes to in terms of KingSett?
Yeah, I would love to
focus on.
Look, KingSett is, we didn't talk a lot about what KingSett actually does, but just in broad strokes, we're a private equity real estate investment business. So we raise large pools of capital across, as I think you mentioned it quickly, but basically across the entire equity, across all of the equity platforms and across all the credit strategies. You know, we basically play in every part of the capital stack, in every asset class, in every market across the country. We do direct investing, we do joint ventures, we lend, and we have capital available in every strategy. And our equity strategies go from opportunity fund investing, which is, large institutional focused closed end business. So we're investing. It's all about what we call event investing. We buy an asset, there's an event, and then we execute the plan, and then we sell the asset. So it's all about figuring out and identifying what that event is. Mm-hmm. We have an open-end vehicle called our real estate income fund, CREEF, and that's a core and core plus strategy where we're buying assets that are of institutional quality and basically keep them in perpetuity. In theory, hold them forever. Yeah. We have an affordable housing business, which is largely developing purpose-built affordable housing in the GTA. We have an urban infill business, which is largely a land assembly business, which is assembling in the urban core of Toronto, high-rise development sites. We've got credit strategies that range from senior mortgage funds to mezzanine and high yield fund business, which does everything from bridge loans, construction loans, land loans, all that kind of stuff. We have a CMHC lending business, which you would find helpful in your line of work, where multi-res investors are coming to us and we're providing the CMHC insured financing for either for their developments or for their investments. And so, across the platform, we basically play in every part of the capital stack, in every market, in every asset class. We can do joint ventures with groups. We can be operating partners. We can be just strictly capital partners. So my broad message to those who are listening, if you are a broker with an idea, an investor with an idea, if you're a potential partner, if you're a buyer, if you're a seller, if you've got an idea where you think there is an opportunity, where there's money to be made and you are looking for someone to help you with that idea, help you craft it, execute it, finance it, and get it done, we can be that counterparty. Yeah. And so keep us in mind. We do what we say. We say what we're going to do. I think as we started off the discussion, we're a group of, we're good people. We're just here to, make life easy for our counterparties. And we're here to be the best counterparty you can have. Yes. Because our view is that if we can be the best person you're dealing with, you'll come back to us the next time you have an idea. Yeah. And that's the lifeblood of KingSet's business. So we're here to help you. And if we help you, we'll be okay. Life will end well.
Love it. And for the rare few who have never interacted with a KingSetter, they are extremely responsive.
Yeah,
responsive,
100%,
dialed in.
100%. Anyone you can email me directly. You can call me. I'm all my contacts on our website, KingSetCapital.com. Every person in KingSet that is employed by KingSet is on that website. So you can find anyone you're looking for. You can find that person. You don't have to, we're not shielded behind some homepage and, unidentified. We're all there. All of our contact information is there. If you need to get in touch with someone, reach out to whoever you want. It doesn't matter. We don't get paid, based on who gets more phone calls. So just reach out to someone either you know or someone you like, and we'll for sure get back to you. And if we don't, you email me directly and I'll get back to you, because that's the core of what we do. Oh yeah. 100%.
Awesome. Rob, thank you so much for joining
My pleasure,
us.
man. Thanks to you, to both of you guys, and thanks to Colliers for having me out. I know we do a lot of business together, our respective businesses.
Yeah.
And you guys have been a terrific partner of ours and supporter of ours, and we're delighted with all the things that we've been able to do together over the years. And let's keep it going. Let's find some good things to do together in 2025. You got it, baby.
Yes, sir.
Love it. Thanks.